Hi everyone, I'm Chris Tipper, Chief Economist and Strategist for the Ainsley Group, and welcome to Ainsley Insights for another week, starting with our precious metals update. This week we're covering the latest in gold, silver, and platinum, with highlights like gold's rally amid trade tensions, silver's surge driven by tech demand, and platinum's robust performance in green revolutions. As always, this presentation is brought to you by Ainslie.com.au, the home of Ainslie Bullion, Ainslie Crypto, Ainslie Wealth, and the Gold and Silver Standard. Be sure to have a look. Let's get started with gold. Gold has been on a tear, extending its rally for a third straight session and reclaiming the 5,100 Aussie dollar per ounce mark amid escalating trade tensions and Middle East fears. Renewed US threats of steep tariffs on Canada, Mexico, and even Brazil, where the country might withstand up to 50% tariffs due to low US export reliance, have fueled uncertainty, potentially delaying Fed rate cuts and keeping gold in demand as a safe haven. Interestingly, the usual inverse relationship between gold and 10-year Treasury yields has flipped positive since June, with a correlation near 0.5, meaning recent bond sell-offs could actually boost gold further, despite higher rates. Meanwhile, Barrick Gold's ongoing crisis in Mali serves as a stark cautionary tale for African mining risks. The military government seized 3 tonnes of gold earlier this year over unpaid taxes and a new mining code, halting production for 6 months and detaining executives. They've now restarted operations under a state administrator, selling 1 tonne worth $107 million to fund costs, labelled illegitimate by Barrick's CEO, while the company pursues international arbitration. A unique takeaway here is the potential for regional contagion, with similar resource nationalism in Guinea, Ghana, and Burkina Faso threatening valuations across African mining stocks and highlighting the need for diversification. On the reserve front, Hungary's central bank has confirmed the integrity of its 94.73 tonnes of national gold holdings after a thorough audit, with an additional 15.5 tonnes stored in London's Bank of England vault. This underscores gold's role as a crisis insurance and a stabiliser for financial systems, especially given Hungary's strategic build-up from just 3.1 tonnes in 1990 to 110 tonnes recently, a fascinating pivot toward transparency and reserve fortification under new leadership. Looking ahead, experts at Metals Focus predict gold will stay well supported through year-end, with limited downside thanks to persistent economic uncertainty and high US tariffs that could stoke inflation over months. US government debt topping $37 trillion and projected deficits adding nearly $4 trillion fuel long-term concerns, propping up gold as a hedge. An interesting detail, gold exchange-traded products hit a record $383 billion in value by June's end, even as the bullish positioning eased, settling at a more sustainable base. But not all is rosy. Demand in Asia remains sluggish due to volatile prices dipping below the $3,300 US dollar mark before recovering to $3,335 USD. In China, premiums ranged between $10 and $25 per ounce, but new anti-money laundering rules might suppress buying until prices hit $3,000 to $3,100. India saw discounts narrow to $8 amid low imports and scrap shortages, with monsoon season typically dampening activity. The unique angle? Supply constraints in India could spark price pressure if imports stay low, even as volatility weighs on sentiment. Overall, gold's resilience shines through these challenges, blending safe haven appeal with real-world risks. Silver is stealing the spotlight, topping gold in year-to-date gains with a surge driven by geopolitical risk and inflation fears. It's now seen as both a store of value and an industrial powerhouse, outpacing gold recently and closing in on 59 Aussie dollars per ounce, a level not seen since 2011. A standout takeaway is that with global demand for clean energy tech like solar panels pushing the market into another deficit year, silver's dual role is amplifying its momentum. Trump tariffs like 35% on Canada and 15 to 20% on Japan and South Korea sparked safe haven buying. The RSI at 75 signals silver may be overbought, but not necessarily that a sell-off is imminent, with potential upside to $37.92 US dollars if momentum holds. Interestingly, silver's following gold's lead in trade uncertainty, but traders are eyeing dips to the 50 SMA at around 36.37 USD for re-entries, especially with bullish candlestick patterns. Under the radar, silver's silent surge is tied to AI and EV revolutions, where its top conductivity is irreplaceable in chips, sensors, and battery systems. Each EV uses 25 to 50 grams, far more than traditional cars. Despite a 5-year global deficit of 149 million ounces this year and maxed out mining in Mexico, China, and Peru, prices at 34 US dollars earlier this year screamed undervalued compared to gold, with potential to hit $50. An interesting insight, recycling hit a 12-year high but can't bridge the gap, especially with US trade tensions risking supply chains. Finally, EFP buying spiked, driving metal shipments from London to New York and lease rates to 5.3%, tripled by tariff fears. What's unique here is that COMEX stockpiles equal over 7 months of global mining output, yet borrowing shortages highlight arbitrage plays for banks. Platinum's on a remarkable run, surging 40% in the first half of 2025, with a 28% June jump, the strongest monthly jump since 1986, hitting an 11-year high of 1,432 USD before settling around 1,373. This breakout from a decade-long range is reshaping the market, fueled by South African supply drops of 24% from weather and power issues, plus Chinese imports up 12.57 tonnes in May. A unique takeaway, US tariff stockpiling spiked lease rates to 22.7% in June, creating shortages despite eventual exemptions, showing how trade fears can ignite physical demand. Demand holds robust despite the rally, thanks to platinum's inelastic nature. Price hikes barely dent buying, as seen historically when prices tripled from $600 to $2,000, yet automotive demand rose 25%. Forecasts show a 966,000 ounce deficit in 2025, persisting right through to 2029, with challenges in mining and recycling depleting stocks. Interestingly, China's jewelry processing rose 26% in the first quarter of this year, and hybrids in the metal's catalytic converters are offsetting slower EV shifts. South Africa's platinum metals are merging powerfully with China's Green Revolution, spotlighted at Shanghai Platinum Week. The platinum group metals are key for low-carbon aviation fuels, needing hundreds of kilograms per million tonnes of SAF, and hydrogen demand could hit 550 million tonnes by 2040, with China's leading in off-grid plants like Envision's 2. A standout, replacing mercury and plastics with platinum catalysts could create a 52-tonne market, while Chinese recyclers profit on low-grade scrap, eyeing overseas expansion despite bans, hinting at collaborative global growth. Platinum jewelry is booming, with global sales up 16% and unit sales in the US rising 19% amid a shift from pricey gold and weak diamonds. China drove a 100% fabrication spike in March 2025, leading resurgence in India, Japan, the US, and the UAE. A unique angle here, over 40 new platinum-dedicated showrooms and gold lines switched to platinum signal, a structural pivot to premium pieces, boosting revenue 24% on higher value buys. Platinum's rally, backed by green tech and resilience, is redefining its 2025 landscape. To sum it up, gold's holding firm amid trade tensions and central bank strength. Silver's surging with its